Got it. Now, okay, how long then until we see the first rate cut?
So that's a great question. In fact, that is the question.
Yes, it is.
It's more important than discussing whether or not they'll raise rates next week. They will.
Right.
Then you're going to have this narrative that is going to be incredibly difficult to divine. Mm-hmm. Because if you knew that they were going to, in Q3 of Q4 of this year, do the first 25 or 50, you want to be long equities for that.
Yeah.
And, you know, you're going to find a very interesting narrative. It's going to be, no one knows, and anybody that says they know, don't know. Anybody that tries to charge you for a service that will tell you, that's worthless information.
Great.
You just don't know. And so accordingly, you need diversification in your portfolio, including a good hunk of cash to be opportunistic in case all of these assumptions are wrong.
How much cash would you say percentage-wise?
Well,
I know your original rule.
Yeah, but I find myself in a very interesting situation. We just did a mark-to-market last week because there was so much turbulence in our private portfolio, and we sold some companies, and we moved a bunch of money out of regional banks, and we're rolling T-bills now.
If I remember, you got rid of your commercial real estate a while ago.
Yes, I did.
Yeah, the last interview, which was about a year ago.
Yeah, no, I did. I did. I not all at a profit, but enough to get out of that sector. I still have some that is, you know, it's locked in. I can't do anything about it. But I'm thankful for that. Mm-hmm. But I'm sitting on about 30% cash.
Oh, wow. Now. Yeah, okay.
And, you know, I'm rolling it in 90-day T-bills.
Oh, yeah.
So it's sort of waiting out what happens next. And I want to be opportunistic because there's so much illiquidity in the private markets right now. I get a call every week, XYZ company, 100 million in sales. I have a 17.5% position in equity. I've been in it for 5 years. We were supposed to go public last year. I'm willing to sell it at a 20% discount for the last round. I love these calls.
Yeah.
I just got one on the weekend. And I listen to the call and I send the deck over to my guys and we look at it. I'll bid that 80% discount, 85% discount.
Why not? You're playing Warren Buffett.
Because I'm buying illiquidity.
Yeah, absolutely.
And so I'm going to, you know, and the fact that you would call me tells me you've called everybody else. And you've tried to do
You're Mr. Wonderful.
Well, Mr. Wonderful, you know, likes royalties, as people know. I like my capital back, but when I get that call and it's always, they're so optimistic about great value this is, and I'll get that deal for 85, you know, 15 cents on the dollar. Or I won't take it because I don't care. But once I bought it, it's my problem.
You shark.
You know, but I'm just very transparent about it because if you really want liquidity, you are going to pay a lot for that, a lot, because I do not want to be locked in. It's got to be 100 deals. 100 have come in just the last 90 days.
Oh my Lord.
Yeah, it's crazy. I would say that, but most of them have been worthless opportunities because they're based on companies that have no revenue or they have no free cash flow. It's always, you remember the hype just before, all the crazy stuff,
the unicorns,
all that stuff. Well, you might have paid, you might have bought into a unicorn at a $5 billion valuation when it had no revenue. Yeah. And now you're calling me up saying, well, look, I'm willing to do it at a $4 billion valuation.
Yeah.
How about it's worthless? And, I have no idea what it's worth. And I'll give you $100,000 for your position. And if you can do better, take it.
Yeah.
Because then I'm going to own the lack of liquidity. There's so many portfolio positions like that.